banking pack. It's more broad-based. Yesterday was pure financials. Today it's more broad-based. Our alpha manager today is with us. Aman Chowhan of Abakkus Asset Managers is joining us. Aman, good to see you back. It's been a while. Thanks for joining us. Good afternoon. Prashant this side. You know, we were just having a word on what else but telecom before, before we took that break in the previous segment. Just your thoughts on it's widespread consensus expectation, tariff hikes, and then, a fair bit of repair for the sector is likely. I just wanted your thoughts on your thinking on the space.
No, we have a similar thought. It's a consensus view now that there's going to be tariff hikes, and now this is a three-player industry, and the government wants it that way. And there will be enough scope for everyone to make decent margins. So right now, even say Bharti and Reliance margins and ROEs are depressed. Post the rate hike or with a normalized tariff, I believe they will also have enough profitability to justify the kind of investments they have done in the sector. So nothing different than what the street is thinking about in the sector.
What's changed for the private sector banks to see this kind of an up move? All the triggers, the valuations being reasonable relative to the rest of the markets, the ROEs, ROAs looking up, margins were stable, growth was strong. Everything was there for the last many quarters, and yet we didn't see money plowing into the banking sector. What changed in the last fortnight for this kind of a sudden catch-up to take place?
You also answered it's more of a catch-up. We've seen other sectors doing well, and banking has been in laggard, and it's more of a catch-up than in bank. As you said, nothing much has changed in the banking side. I believe as there's always a sector rotation which keeps on happening. Today it's banking's turn. Maybe this week banks can do well. Overall, from a fundamental perspective, we are also pretty positive on banks, both private as well as the large PSU banks, and the outlook of that remains strong. So if you're building a consensus that the GDP growth from here is going to accelerate, GDP can't grow without the banking sector participating. And within that, the private banks as well as the PSU banks both look attractive to us.
All right. So nothing fundamentally has changed, but it's just sector rotation. So what, according to you, have been some of the underlying fundamental changes in some sectors which are making it a little interesting from an investment standpoint?
Over the last few months, we have gone positive on pharma. We have now got selectively positive on chemicals. Both these sectors are either bottoming out or started to recover from the recent lows. We are still neutral on IT. So that's where I can say our views have changed over the past few months. Besides that, continue to stay bullish on infra, cap goods. Financials was always being an overweight for us. So these three sectors are something where fundamentally our view has now turned constructive than what it was, say, 6 months back or a year back.
On pharma, what about hospitals? Earlier today we were having a chat with, Macquarie, and he was indicating, the analyst there, that one, the volumes, the inpatient admission was very strong in FY22 and FY23, closer to 25% because of pent-up demand due to COVID. But that is moderating. In FY24, it came down to just 5%. And that's been the long-term trend, single-digit inpatient volumes. Secondly, even the RBOP was unusually high in the last 2 years, but that will go back, mean revert to, high single digits kind of. So therefore, and plus capacity is being added at a very rapid scale for companies like Max Healthcare, for Apollo Hospitals, for Max in particular. He told us the capacity goes up by 80% in the next 3 years. So where do you stand on hospitals? Because you spoke about being incrementally more positive on pharma.
So we like pharma more than hospitals. Right now, we don't have any hospital exposure. For us, hospital is something which has to be looked on a case-to-case basis, not as a sectoral view, because the companies here have a longer gestation. So they have a large capex for any new expansion that comes in or a new property which comes in. And then it takes time to break even. Till the time there's a continuous drag on the P&L from depreciation and interest costs. And once the hospital normalizes, starts to make money, you announce another hospital, right? So there is very little window where the financial numbers justify the kind of valuation most of these hospitals are trading. So for us, it's more of a case-to-case basis. For now, I think our preference is to stay with the pharma companies than the hospitals.
Another theme we were talking about is sort of water, right? One name, of course, Viatech Vabag is up 10%. But I mean, it's a It's a theme which is, I think, in this case, it's underserved by the number of listed players in that sense, right? Because it's a big one. Your thoughts from an investor perspective, Aman? Are there opportunities here, and what sectors? Because you can look at pumps, you can look at water purification, desalination kind of companies, or other areas as well. Just your thoughts.
We are pretty positive on this segment, and we have been owners of some water treatment companies for the last 2-3 years now, and continue to remain positive because the kind of government spend that we're going to see in this segment is humongous, and there are not many companies that have good experience. Like, we have lots of companies in the EPC space for building a road or a highway, but when it comes to civil or urban infra, there are not many companies here, and that's the reason we are pretty much excited in this space. So the macro looks good. The government spending is going to be good. Within that, as you said, we have a choice. We are more invested into water treatment companies, but there is opportunity even for the pipe guys who make water pipes for transportation of water. And pumps are also an indirect beneficiary of what's going to happen in this space. For the next 2-3 years, at least, the segment looks pretty strong.
On consumption, there are a lot of people who believe that we're way past investing in the staples business for growth, etc. You rather back the new age consumer stocks or new age ways of consumption, either through telecom or the Zomatos, etc. of the world. So, what are your thoughts on this theme? How do you play the great Indian consumer story?
It's always exciting to be invested in the great Indian consumption story, but we being value conscious investors, we find most of the stocks great companies, but not at a great valuation or where the risk reward equation is favorable for us to invest into them. So on one side, it's a great company, but is that great company a great investment? Maybe not, because we are shy to pay excessive premium. So the sector is good. Obviously, last 2 years, there has been a slowdown in the volume growth. People are now expecting that to pick up. But even if the volume growth picks up, the kind of valuation most of these companies trade, there is not much of, you can say, positive risk reward for investors like us to invest into this segment. So while the outlook is good, from a valuation standpoint, not very excited.
What about travel as a theme? That's a big part of the great Indian consumer story. Travel is booming. What's the best way to play it? Hotels, airlines? Will it be B2B travel platforms like TBO Tech? Will it be B2C like the recently listed Ixigo or Ease My Trip? Which one makes a sound investment at current levels?
Our preference will be the service providers. So travel agents, even say tour operators, event management companies, this would be the natural beneficiaries, and preference will be to them rather than getting into an airline or a asset heavy business like a hotels. The hotels in the near term will continue to do well because both ARR as well as occupancies are up, and it's a fixed cost model for most of them. But over a 3 to 4 year period, I believe the service providers in the hospitality industry will do much better.
You said event management companies. We have these companies listed?
Few of them, they are mid-cap companies or small-cap companies, not in the broader market, but very few of them.
Got that. By the way, Aman, just to last word, the budget is going to be the first big thing, right? From here, the next big thing, rather.
Yeah.
Directionally, you think just to go back to what we were discussing when the election results were coming, because of the changed numbers, etc., will it be very much capex oriented, or will we see something new on the consumption side? Even from a market, how it reflects on the market, because everything capex has done very, very well, and there are maybe some ignored sectors, subsectors on the consumption side which remain maybe a little, they've remained cooled off for a while now. So just your thoughts, Aman, with the budget.
Frankly, with the budget, your guess is as good as mine. Absolutely no idea where it is. Only thing which I can add is that it's the same team and the same FM. So not having any major expectations from the budget, because if something that they wanted to do, they would have already done it, or they can do even off budget also. So what is the trend in the last few budgets is that it's been more of a non-event kind of thing. Something similar can happen this year, maybe some tweaks here and there, but frankly, no clue as to which segment is headed towards, in which direction as far as the budget is concerned.
Okay. And of course, the last budget speech was also very short. Maybe not this one. I think is going to be it's a full-fledged budget. So we'll, in any case, we'll watch it closely. Thanks very much, Aman, for joining us. Great speaking with you. Appreciate your time here on CNBC TV18. So that's the quick sort of a bit on markets. Let's move forward. Put the focus on the